Alright traders, we're looking at S&P 500 M&A futures, and we're going to be using pure price action to help us navigate the market and predict high probability setups. So as a price action trader, I start with the pre-market structure analysis, and the market analysis right now is fairly easy to do because I can see you have massive spike up, you have a spike, and we have a secondary channel pattern. You can see how nicely the price action fits. I'm looking for market geometry. I want to have a lot of confirmation. So we spiked up, we have a consolidation, and we have secondary bullish trend working higher, and we have a nice spike in the channel pattern working higher. So right now, I'm not even thinking about selling. I'm only thinking about long entries. That's pretty much it. And let's zoom in and let's see what's going to happen. We had a couple of good setups way early before the market open. So it depends if you're trading or not. And right now you can see we are breaking our uptrend. So according to trendline rule, I expect prices to continue working higher. Remember, we traded up. We are trading a bullish trend. So I do expect prices to go higher. I have a new high where I'm going to reset the count. First entry long, pullback, second entry long. Now this is decent second entry long. Problem is, and we have even better high-low confirmation setup. Problem is, this is exactly around the market open. Yeah, this is exactly around the market open. And not that it is wrong, but sometimes around the open, there can be a little spike in volatility. Once you are trading for quite some time, you definitely can see that around open, there can be a little spike in volatility, maybe some fake out traps. So I generally don't take setups around the open, and I recommend that to novice traders as well. These setups are good setups, okay? EMA is holding, key entry point is holding. You need to get new high, we traded up. So everything makes sense, but you can't really take those because it is right around the open. So I'm going to mark it mainly educational wise. Let's say next time I'm going to see it, it's not going to be at the open, but you can't really take it because it is right at the open. Okay, some traders who are skipping to the end, they're going to be a little bit confused, but you can see here's the explanation. It is right around the open, so we have to be a little bit careful. Once again, not that it is wrong, but there can be a little spike in volatility. Great context, breaking new high, and uptrend played out. So now that I can see breaking new high, I'm going to pause looking to go long just for a short time. Let's see what's going to happen. Hypothetically, had there been felt second entry long, are you interested? Not really, because the uptrend was really strong, okay? The stronger uptrend is, the more I want to see some proven downtrend first before I'm going to start selling. So right now, I remain patient because as a price action trader, what I want to do is I want to take advantage of the structure that is confirmed. Once everything played out and there is new area of development, that's where I have to remain patient and see what price action does. I need more information. And we have massive spike in volatility again. This happened today a lot. So this happened out of nowhere, no significant news. It happened many times today. So once I'm seeing this, I'm not even looking for trades because everything is moving super fast. Bars are gigantic. So I'm just gonna skip through this. You don't want to take anything. You have a mini second entry long, but our uptrend played out. This is moving too fast. You don't have a secondary pattern just yet. So you have to remain patient. You can't take anything. Redraw the short-term downtrend working lower, something like this. And on top of that, we have high impact news announced soon. Now, every single day before I start trading, I take a look at Forex Factory calendar and I mark the red high impact news, and I also pay attention to orange medium impact news. You have to do this as a trader before every single session. It can be a little bit annoying, but it's not that big of a deal. It takes 10-20 seconds only. Just look at the calendar, see what the important news are, because you don't want to be taking setups around the news. Once again, news can distort price action. There can be spike in volatility. So I generally don't trade like 5 minutes prior and after news just to make sure I'm safe. I'm watching how fast the market is printing, and market was quite choppy around the news. So right now I'm going to be patient. Now what I like doing is, because we are breaking new high and significant push up and prices are back above EMA, I like looking for some bigger channels, something like this. I'm going to draw it a little bit shorter, like this. What I like about this channel is the fact that I can see some reaction here, okay? I get some breaking new low and I have some market geometry, high lows here. This is typically that there is a trend line in play. So I'm going to mark breaking extreme. And market keeps working higher. Okay, so this channel right now is getting somewhat confirmed. So the bias remains bullish. Okay, bias remains bullish. News are out. Okay, at the time we wouldn't have this skill just yet. And we have massive spike down. So I have to redraw short-term downtrend. I have to redraw these channels. I cannot go long below EMA. You can see it looks like a barcode, too much of a congestion. Once your price action looks like a barcode, you don't want to take it because it's just so stacked, so congested. The downtrend is still in play. We spike down, we're wedged. You have to be careful. You'll break a new extreme like this. And right now what I like doing is I like drawing some small consolidation and the big one because we traded up. EMA is going sideways for quite a while. And when I'm watching this, I'm not really looking for trades. Yes, I expect a new high because we broke this uptrend. So in the back of my mind, I am thinking bullish, but problem is this is so sideways and so choppy. If you look back, all of these high probability setups, they form clean. They form clean when the structure is clean and you're at the key entry point. Once you have EMA on these bars and you're going sideways, this is where, you know, you can get tripped up. So personally, I was just laid back watching this. Once again, another spike in volatility. Actually, this was news once again, medium impact news, but you can see what a spike in volatility this was. Breaking new high and uptrend played out as well. So all channels played out and we have massive congestion. Don't look for anything. According to market cycle, after breaking new high, you can get a brand new market cycle, some consolidation, and then brand new trend can start. Okay. So right now, because our trend played out, we can have market cycle consolidation, but this is choppy area. Once it gets tempting to both buy and sell at the same time, that's how you know you're probably gambling. You don't have an edge on your side, and it's important for us to have edge on our side. So I'm not taking no setup here. Everything played out. I'm just patiently watching this develop. When I'm watching this live, I'm going to redraw the downtrend working lower. I can't sell right into these lows. We are still part of some consolidation. This is a sideways price action. And now it's finally starting to be clear. This is what I like, because I can see that the support held, the trailing range held, and have a significant spike above EMA. So what I'm going to do, I'm going to draw a brand new uptrend. And now, since the structure is easier to read, I'm looking for second entry long at the EMA, because even though I'm trading a consolidation, I still expect short-term channels to reach new extreme and follow trendline rule. So I am anticipating second entry long at the EMA. Okay, no pullback to the EMA, breaking new high again. So even the short-term channel played out. Can you think about fading the breakout? Not really. Remember, you traded up so strongly. You know, you can't really sell. This is not typical healthy range. You trade up quite strongly. You know, you have some second entry short, but the bar is absolutely gigantic and it feels a bit too early to sell. You know, given the fact how strongly you traded up, it's better to be a little bit patient now. I'm going to redraw a brand new downtrend. The range is holding, you're trading down. I'm going to redraw some mini spike and a channel pattern. Something like this. Okay, we have overshoot. I cannot tell we had overshoot. Horrible signal bar. So I'm just being patient. And I can see right now that the market is breaking below EMA. So what is the plan now? I'm going to take a look at this structure, and this is the point where the downtrend started. So the push down is quite decent. We have a spike and a channel pattern. We have some small resistance, and because you're back below EMA now, I actually am thinking about lower high confirmation setup to test the new low. Okay, resistance here, lower high below EMA would be decent. Lower high worked, but we can't really take it because the lower high is a weak tier signal bar. Okay, you can see bullish body here. The context is readable enough, but not super clear. So this is not strong enough signal bar, so I can't really take it. If you have some better bar on your chart, bearish bar, you can definitely sell. But spike and channel needs new low, some triple top, double top, break below EMA, confirmation. I'm not thinking about buying because we traded up quite strongly all the way from this point. You can't even stay above EMA for quite a long time. And market keeps trending lower like this. So right now, this is a sign that I can look for some bigger channel. I can either start at the very top here using the first swing all the way to the top, but I already have overshoot and I have so much empty room here. And you can see how price action is being pulled down lower. It's drifting lower. This is not good structure. Okay, the channels, they need to have price action in the middle of them. Price action needs to fit well. So it's definitely okay to select the second swing and use this one to draw it a little bit steeper, because it makes sense. This is the sideways price action. This is really the area where the real push down started. So I like drawing this. This looks a little bit better. You have a second entry short, but you're not fully at the exponential moving average, and you would have to use double bar entry. So can't really use that. Okay. I have second entry short again, but problem is I have short-term option in play, potential overshoot. Only now I can widen the channel. Okay, I keep redrawing these short-term channels. Break a new high, uptrend played out. So uptrend played out. And now let's see if the key entry point is going to hold. This is an inside bar, second entry short, and we cannot take it. But as a price action trader, you already know how market moves to like a pullback. So if the key entry point is going to hold, you're looking for a lower high below EMA. Because right now, if I'm going to zoom back, it looks perfectly like it follows market cycle rules. Uptrend, break new high, new market cycle, area of consolidation, and the market geometry is allowing us to draw a brand new downtrend, and now new market cycle is going to be this bearish trend working lower. So we are predicting price action going lower based on pure price action. Now just time the entry properly. Once again, inside bar, not the greatest. Can I get a lower high below EMA? Okay, it's looking good. You have a lower high here, but once again, quite weak, not full at EMA, you know, steep as well, not the strongest single bar. No matter how I close my eyes, I just don't really like it as much. Maybe because the context is so clear, 2 legs up, break new high, key entry point held, push below EMA, resumption of brand new push phase. Oh, there's a lower high sketchy. I didn't take it. Too sketchy. Market is correcting, but nothing is changing from my analysis. We are trading a bearish trend down. Our job is easy. Just take high probability setup at the EMA. Another second entry short. Can I get a lower high below EMA? Yes, I can. Actually, I was on my break here, but traders told me that it first broke higher and then reversed down. Either way, no matter how it broke, it's a lower high confirming second entry short. I kind of like it. This is a decent setup. I'm going to mark it. Even if it is a little losing trade, I still like it. Decent setup. But it actually wasn't losing trade at first. Broke high, reversed down. Okay, and now you have also another lower high. Because you have... Actually, this is a failed second entry long. New high, first entry long, pullback. This is visual failed second entry long. Or you can view it as a breakout pullback out of this consolidation. This is a solid setup. I'm going to treat it as lower high breakout pullback, but you can view it as a failed second entry long as well. This is a great setup as well. Great signal bar. You're at the EMA. It is a breakout pullback. The downtrend is still in play. The market keeps working lower. Okay, we are correcting. So right now we are breaking the downtrend. So as a price action trader, you are expecting market to test the new extreme. Okay, there's a clear downtrend. But you simply don't know how long the correction is going to be. You need confirmation, okay? That's the point of following the rules, having an edge on your side. So you need push below EMA, number one, and then a lower high or failed second entry long. But we can see that the correction is stronger than anticipated. Okay. And we're back above EMA. We just can't stay below EMA. So what do you do in a situation? Let's say we're right here. What do you do in a situation like this? Do you draw a wider channel like this? This is tempting. Or do you expect new extreme following the trendline rule? There are two main factors that you need to take into consideration, basically, what you're paying attention to. That's going to help you predict what's going to happen. Number one, according to price action rules, bigger patterns in price action take precedence. So this is the bigger pattern. We trade it down. And because the bigger pattern takes precedence, we prefer to be drawing these correction channels against the main trend channels tighter. So I don't like drawing wider channels because it's a bigger pattern. And the second tool, you're going to measure the retracement. You're going to select the top, go all the way to the bottom. This is a Fibonacci. And you still haven't retraced over the 50%. Once you are over the 50-60%, that's when you forget about new over the downtrend and you are adapting to bullish trend. But you didn't even retrace 50%. So we're going to break below EMA. I still expect new low. Because the retracement is not significant. This is the bigger pattern. So these are the tools I use to help me predict where the market is going to go. It can happen. The correction can be just a little bit longer, whatever it was caused by. It doesn't really matter. Okay, you have a lower high here. Can you take it? Not really, even though you expect new low for the big channel. You know, lower high is good when the correction is tiny. The more bars you have here, the longer the correction is, the more you need second entry long failure, or preferably some proven downtrend like this and a second entry short. So can't really take it. Once again, maybe if you're more aggressive, because it was tempting. Your gut feeling is saying it's going to work, but you prefer for a second entry long in a situation like this because this pullback was strong. Can I get a second entry short at the EMA? Two downtrends need to get new low, and you're breaking back above EMA. Okay, so this was pivotal, because now that you're back above EMA, something is off here. Something is off because this is not what is supposed to happen. Okay, this trend and this trend, they both need new extreme. So how come EMA is not holding? So once I see this, I immediately question the presence of sellers in the market, and I right now sit on my hands. Okay, I don't want to take anything right now. It's too choppy, it's too sideways. In fact, what I'm going to do, I'm going to predict consolidation, but hopefully it makes sense why I'm being patient now, because this is not what is supposed to happen. Now, I'm not thinking still about buying because this is a bigger pattern, especially on 10,000 tick chart. We need new low. It's more obvious there. It is not uncommon for price action to eventually test the new low, but it may take its time. It's going to take the longer route. It will slowly and choppily just roll over. So this is what's going through my mind. I just want to see some proven downtrend, some breakout pullback of this key level to start thinking about selling, because once you have EMA flat like this, you have to be careful. Okay, let's see what's gonna happen. Okay, can't sell here, nothing really here. I can't go long because the big pattern needs new low. Okay, so even though this is a small trend range, don't focus on this, focus on the fact that you traded down into this and it needs to get new low. It can roll over. So let's see what's gonna happen. Some two legs up, no break here though, and we traded down. Okay, so now I like connecting swings like this. We're getting some market geometry. The reason why I'm looking now for a little bit of a wider channel is because this one needs to get new extreme. Oops, needs to get new extreme. So it definitely makes sense to right now draw a little bit wider channel with the direction of the main trend. Okay, and now we have interesting setup. New low first entry short, horrible second entry short bullish bar you cannot take, and this is double trap. Why is double trap? Because everyone who sold this second entry short with the bad bar, they just got trapped just by one or two ticks, and everyone who's going to go long, they're going to get trapped because they're trading against the main bias. So this right here is double trap, great signal bar, a little bit big, but it is a breakout pullback, uptrend breaking new high. You know, this is a solid double trap like this, breakout pullback as well, confirming the trend line. Okay, the downtrend, as you can see, still needs to get new low, so I'm thinking about second entry short at the EMA. Can I get it? We're above EMA now. Okay, so now I need lower high below EMA. Okay, you sort of have it. You have lower high. It's not fully below EMA, but because two downtrends need to get new low, and every single time you have this many channels that need new low, you're always more confident than just one channel. This one and the big one need new low. So decent enough, very close to being red. You might as well mark it red because it take high reverse down, broke two legs. The chances are really high that you're gonna go lower and test the new extreme. And price action played out with the break, push to new low, so you have to pause, looking to go short, and market right now is about to close. So this is the overall structure for today. Really great price action, quite predictable. Look at the price action rules. I mean, you have to love it. Nice uptrend working higher, nice market geometry, breaking new high, so new market cycle can kick in, consolidation, and we're using brand new, once again, series of lower highs, low lows, market geometry to identify the trend down, break, and we took a long route to test new extreme and eventually new level tested. This is perfect price action. This is beauty. I mean, you have to love trading. I absolutely love this. You know, it's truly amazing that it all works so well. It's not that easy when you're watching this live. Of course, sometimes it is harder, sometimes it is easier, but it's truly amazing how well it works, the price action. I just love being immersed in this. Maybe a little bit weird, but you have to love the game. It's truly amazing. And it works the same for such a long time. We're training for such a long time. If I put a chart that is 15 years old and you're going to compare it to this chart, you won't be able to tell the difference. If I hide the ticker and I hide the date, you won't be able to tell the difference. It just comes down to human psychology. The price action still works the same. The only thing that changed is volatility. We get more movement and bars are bigger. Market felt much slower 10 years ago, but other than that, the moves and the market geometry, the channels, they still work pretty much the same. So decent setups overall. We would have a little bit more setups if there were better signal bars here, you know, here, So unfortunately, some of those bars were a little bit sketchy, but overall, you can find a few good setups. I'm going to wrap it up. I hope you had a good trading day. I'm going to talk to you next time. Good luck in your trading.